So it's been wild times in gaming. We're seeing valuations near 5-year lows, and I think that's probably one of the reasons why we're starting to see some more activity in the M&A space. Stocks in my space are off anywhere between 10 and 50%, despite companies reiterating guidance for the years and talking about strong fundamentals. So we're still very convicted in our $15 price target. The fun is just getting started at Caesars. They emerged from bankruptcy a little over a year ago. They've been increasing margins quite predictably. They have nice licensing deals for next year. They're coming to an end of the CapEx cycle. So, we're very confident in our $15 target. I think that's probably a starting point if that is confirmed, but we think there's more value than that.
Stock's not even trading up to what is the reported bid. So does that tell us that it's unlikely to happen? What do you see could be the potential stumbling blocks?
There's been a lot of M&A in the space. I think, just in the past 2 years with some new gaming REITs, there's been some creative ways to finance deals. Let's not forget that Caesars, after their stock fell off after the second quarter report, they repurchased $300 million worth of shares at around $10 per share. So even though their leverage is pretty high, they decided to step up. They certainly believe that their stock is worth more than, I think what this rumored number is, but I think there could be some more M&A out there. Just last week, Penn and Pinnacle closed on the biggest deal in gaming history in terms of number of properties. You have a few other deals out there, so I think there could be other partners that Caesars could partner with if they're looking to go this route. They also just acquired a company for $1.7 billion. That just went into their fold, and I think they're probably more on the prowl on the M&A side instead of on the defensive side.
You think Caesars is on the prowl? This seems to me to be a case where a little fox is trying to eat a bigger fox. And if the little fox succeeds in eating the bigger fox, how is the little fox going to digest it? What, in other words, is likely to happen to Caesars to be fixed? To use the words that are out there, Tilman would come in and, quote, fix Caesars. What needs to be fixed?
Yeah, well, Caesars still believes in the hub and spoke approach, and this is having casinos all around the country and then sending your loyal customers to Vegas. Currently, about half of the rooms are occupied by these customers. So the goal is to grow the database. Now, what Tilman brings to the table, if the restaurant business and database is included in this partnership, would be his, years of building these 60 brands. I believe he has 600 or 700 restaurants, good locations that also get you into, some of the bigger populated states like Texas. Also, Tilman began to buy up casinos a few years ago, so he has half a dozen casinos. One of them is in a very attractive market in western Louisiana, caters to the Houston crowd. Caesars does not have a property there. Gotcha. He also has a nice property in Biloxi. What would be a little bit troubling is obviously Atlantic City exposure. Caesars has 3 properties in that market, and then he has 2 other properties in Nevada. So okay. I think from a casino standpoint, decent overlap, but what he would be bringing to the table is that database in restaurants. All right.